Hey, I am Alan So Blank, and I'm gonna make another one of these videos about teaching you how to trade. And now I've been talking about candlestick charts, so I'll use a whiteboard, and hopefully the sun glare doesn't block what I write during the video like it did in other videos, and then I had to move the board around. So far in the previous two videos I talked about prices, different prices and time frames, and I also talked about the difference between a green candle and a red candle. So now I'll continue the discussion about candlestick charts. Okay, let's see. And this time I spelled candlestick right. Okay, in this video I can talk about common patterns and then there's some different types of candles. Okay, so the clear candle will be a red candle or a green candle. So let's say if we have two green candles going up, and then maybe you got a small candle that maybe looks like that. And so this candle is called a Doji. I don't know who came up with the name, but this represents market uncertainty. So here, when it has a long body and it's going up, these are bullish candles. But now on the third candle, this represents uncertainty because the price opened and closed around the same price. There wasn't much price movement in this doji. So this can be a sign that the direction of the market might change. And so a doji, it can be a green candle, or it can be a red candle, and they pretty much mean the same thing. It's market uncertainty. And so when this happens, you still want either bullish confirmation or bearish confirmation that the market indeed changes. Because maybe you might think like, oh, it might be going down now, but if you didn't wait for a bearish confirmation, the market might continue to go up again, or up, so clear candle is green in this case. Okay, so those are dojis. And then another kind of candle is a shooting star candle. So like this is called a shooting star candle. And that usually represents that it's a possible top. Like if here we can say the stock is spiking, maybe the price here was $1, and then it's been going up, and then we can call this 150. And so if you get a shooting star candle, that usually represents a top of the spike or a top of the uptrend. And what this means is that the candle opened and then the price went up, up, but then it went right back down, down, down. So if it goes up right away and then goes right back down in a short amount of time, that can be a bearish signal. And so you would still want to wait for bearish confirmation, because sometimes you might get another green candle and it might be kind of like a fake out. So let's say, okay, we got now a red candle, and so now this is starting to look bearish, and this can be a potential trend reversal. And so now maybe we can get a series of red candles. There can be a sell-off. And then you might get something like this, which is the reverse of a shooting star. And this one, they call it a hammer candle. Okay? And so it's basically the opposite. So if the shooting star usually represents the top, a hammer candle can usually represent the bottom. And just like with the Doji, it doesn't matter if a shooting star or hammer is red or green, the main price action is the same. So on the hammer, if it goes down right away and then goes right back up in price, okay, maybe this was 110. So it went from 110 all the way to $1, and then it goes right back up to like 109, let's say. That represents, it's usually at the end of a downtrend, and you might say this is the bottom. Okay, so far we went over a doji and a shooting star and a hammer candle. And then sometimes, let's say if you see, I'll just write on the bottom, so sometimes instead of seeing a shooting star candle, you might see something like this. Like a kind of a bullish green candle and then a bearish red candle. And so this, I forgot the technical names, but let's say if this is the 1 minute chart you're looking at, and then let's say now if you're looking at a 2 minute chart, this can equal shooting star. So if you see something like that, and then like a green candle and then the red candle, the body of the red candle takes out most of the body of the green candle, it can equal a shooting star. Because if this is a 1 minute chart and you're looking at a 2 minute chart, this would look like this, which is a shooting star. So the same is true in the opposite direction. You can have, and then again here, it doesn't matter so much the order if it's a red or green candle. So here sometimes, or the opposite is true here for a hammer. So let's say if you have a green candle, okay, okay, let's say this is a red candle if it's the opposite, and then you have a green candle like that. This can equal the hammer candle. Okay, because again, if you were looking at, if this was a 1 minute chart and then you look at the 2 minute chart, it would look like a hammer candle. Okay, and then one more. So those are the basic types of candles. And now, I guess I have a little more time. I can talk about something else. So let's say here, before the spike ran up, let's say if the candles kind of look like this, and so let's say if this area right here, let's say if this lasted for like 30 minutes or an hour, or so, this area right here, when it might look like a bunch of dojis maybe, or that there isn't much price action going on, we call this okay, I'm just going to move the board and write it. It's called consolidation. And so during consolidation, the price is kind of hanging around. And so here we can say that this is okay, I got a battery notification, so my phone might die soon. I didn't plug it in, so I can start wrapping up the video. So this is consolidation here. We can say that the stock here consolidated around $1, and during consolidation the stock might, you can say, like, it might create a channel. If you draw lines here, we can say maybe there's a channel between like $1 and like $1.07. And then when there's a channel and consolidation like this, you can kind of wait for the market to choose a direction. So when there's a lot of consolidation and a channel forms like that, it might, start going down, or it might start going up. And during this time when it was consolidating around $1, then after it went up, it broke out. And so I can also talk about quickly a breakout and a breakdown. So here, when it was consolidating, we said it formed a channel around $1, and then we'll call this high 107. And once it broke out of this channel, we can call this a breakout. It made a new high during a moment of consolidation, or some key level on the chart. Okay, well, in the next video I can talk more about breakout and breakdown. But the main points in this video now, you should understand what a doji candle is, what a shooting star candle is, and a hammer candle. And then remember, you want to wait for, when you see a shooting star or hammer candle, you kind of want to wait. If the trend is reversing and you're expecting it to go down, should wait for bearish confirmation or a red candle, and then vice versa. If it's a hammer candle and you're thinking, oh, the downtrend might end, you should wait for bullish confirmation or a green candle like so, and then maybe you'll probably want to long this here, thinking okay, it might go back up to 150. Okay, and then these here, these two candles can also represent a shooting star or a hammer. And then we talked about consolidation. Okay, so now hopefully you're starting to understand more how to read candlestick charts.